Hi, this is Zach from Zach's Traders Cafe with a look at the major markets on Tuesday, the 31st of May. Starting off with the FTSE 100, where slow but steady progress is what we've seen over the last few sessions, breaking the 50-day moving average at 62.10. That's the blue line. And also RSI 50 to leave it at 57, which is right in the box zone as far as further gains are concerned. Looking for 6600 as the target over the next 4 to 6 weeks. That target valid while we hold the floor of this rising trend channel from January, nominally at 61.50. Onto the DAX, and no stopping this market so far in terms of the gap through the 200-day moving average that we saw the other week. That's the black line there at 10.109, and beautiful signal there really after the multiple bounces or rebounds off just below 9800. That was a gap fill of the April gap floor at 97.70, so that worked well in a technical basis, and we're looking as high as 11,000 over the next 6 to 8 weeks, maybe even sooner, while we hold the 200-day line. Initial target 10,474, which is the April peak, and then after that 11,000. RSI is 62, so not overbought yet either. Onto the Dow. The American markets leading the way, I suppose, in some ways, given that they weren't as bearish as the European ones, above the 50-day moving average at 17,737. Looking for further gains. Nice little flag developing here as well. Initial resistance 17,934, but above that we could look to as high as 18,800, which is the top of a rising trend channel from as long ago as January. The other point to note probably is the way that RSI 57, so still very, very tame, not overbought at all, and also this 200-day moving average at 17,124 starting to tick higher, and that could accelerate the gains that we've seen. Next up to the S&P, and here similar picture to the Dow with the clearance of the 50-day moving average at 2066, just knocking on the door of 2100. That should be just merely a formality. The real target here 2200 at the top of this rising trend channel from February. Stop loss back below the 50-day moving average. Onto the Nasdaq, and here we've got the big breakout through the 50-day line, 44.33, helped along by the Warren Buffett purchase of Apple shares. 4,800 the target here, while there's no end of day close back below the 50-day line. We can also see that all the near-term moving averages are starting to rise, so that is making this market look very positive indeed. Onto the currencies, and surprisingly the cable not affected so far by the prospect of Mr. Cameron being booted out. Perhaps that will come in later. But as things stand, we've got a rebound off the 10-day moving average at 146.09, a resistance that the 200-day line 147.57, really as an end of day close above that should give us the 150 target we've been looking for over as soon as the course of June. Onto the euro, and here it's playing ball in some ways, in the sense that we bounced off the 200-day moving average, which is one of the two places that we thought this market would bounce. That's a 110.98. Also, we're also at the floor of this rising trend channel from the start of the year, and you could say that that is also around this 200-day line level. Probably want to see an end of day close above the 10-day moving average at 111.71 before going long, just as a momentum trigger. That would then target the 50-day moving average at 113.06. On to dollar yen, and this has been the big breakout story over the course of the long weekend, breaking that descending triangle, descending channel rather, from January. 109.77 the area of the position of the 50-day moving average, and while we're above that, probably looking back towards the 114-115 zone, which is March resistance. Then we also broke an RSI downtrend line as well, which was quite impressive. Finishing off with gold, and here bounced back from just around the 1200 zone, 1199.80, and back up again. Hopefully that will stem the losses, and we'll go up from there. But initial target 1240, which was the neckline support, which was broken, and hopefully that would be recovered over the next couple of weeks to at least to underline the way that this breakdown in May was merely a bear trap rather than the start of an extended top coming in there. There's always the risk, though, a break of 1200 would take us back down to the 200-day moving average at 1163. That's it from me. More updates at the same time tomorrow.